Welcome back to our course on FinTech Foundations and Overview. In today's session, we're going to talk about a case study of a FinTech pioneer, early adopter, early success story that became a dinosaur and then struggled. It's doing okay today, but it went through some rough years. Well, let's talk about this company, Capital One. Capital One started out with 5 guys with a smart idea. 5 consultants to the banking industry, and they said, we have an idea for a new way of doing banking, a new way of increasing profitability. We're going to focus on the most profitable customers. We're going to focus on the segment that has the highest returns and the lowest risk. Now, they went around and pitched to other banks. We have this great idea. Let's just focus on the profitable customers. And bankers said, what? Come on. We're already doing that. Or, this can't be done. You can't identify customers in a particular segment who are risky or less risky. We already do credit scores and other things. And they said, no, it's more than that. We're going to use big data and analytics and data mining. And we're going to do this in creative ways so that we can understand much more about the customer than they even understand about themselves. And we'll be able to find people who carry large balances and pay interest every month on their credit cards, but never will default. So we'll take the low risk, high revenue customers, and we'll offer them a better deal. We'll say, if you come switch to our bank, we'll give you lower interest. We'll cut your interest rate in half. Customers said, that's a good deal. But we only want the low-risk guys. This resulted, as they succeeded in it, in transforming the banking industry because the other banks were left with higher risk customers and the same price, which means they were going to lose money. And this, over time, disrupted the industry. It was a disruptive innovation, a disruptive technology. But it didn't work like magic, and it didn't work overnight. Capital One started up. They went around and pitched the idea to the banks. Most banks said, no, thank you, not interested. But Signet Bank in Virginia, a small regional bank, said, we like it. Let's try it. So they started up, they spun off their credit card business into a separate venture, which they over time renamed Capital One. And they put these guys in charge and said, take the data we have, find other data, do some analysis, and figure it out. You said you can do this, show us. For 3 years, they lost money. They spent a lot on data analytics. They spent a lot on testing and learning different models, different ideas, and it took them 3 years to get things right. During that time, management, or the owners of the bank, shareholders and the board, had to be patient. And in some cases, they're getting a little frustrated. Really? You guys told us you're going to make money. All we're seeing is losses. What gives? But they said, bear with us. We're working out the model. We're getting some things refined, and we'll be there. After 3 years, it started working. It started working really well. They started figuring out who were the customers they were trying to target, and they got very good at risk assessment. And they became the fastest growing bank in America. They were dominantly credit cards and offering lower price than any other consumer bank for their credit card customers, lower interest rates, but had lower risk by far than the average pool of customers. And so other banks were left with a higher risk customers, higher cost, and started losing money. Other banks discovered the only way to respond to this is to do the same, is to develop their own data mining capability, their own data analytics, because you cannot ignore this. This is the nature of FinTech, that you cannot ignore a powerful technological disruption to your industry and just say, I don't want to do that. I don't want to play that way. For example, one investment bank CEO was talking to other bankers at a conference and says, you know what, every year we invest more money in IT. And every year we're making less profits. why don't we just stop? Let's just quit investing in technology and stay where we are. Another CEO says, why don't you do that and let us know how it works out? Well, obviously, that's a silly idea, and it's not going to happen. Margins are under pressure, and if you stop, if you don't invest, if you don't continue to improve and innovate, you're gone. You're dead. Well, Capital One became very, very successful. By 10 years later, after the bank had founded, as Capital One was created, 2005, 10 years after their founding or creation, they had become one of the largest banks in the United States. They were all about consumer lending. They were not like other banks. They were a credit card bank, but they were very, very good at what they did. And they came up with some other innovations that were exciting. But one of the things they decided to do is to invest in more traditional banking services, to invest in things like subprime mortgages. Oh, I think you can see where this is heading. They became big, they had a lot of capital, they had a lot of money, they had a lot of profitability, and they said, we want to be like every other bank. Every other large bank has all of these things. They're investing in mortgages and real estate and all this cool stuff, all these innovations. We're getting left out, and other people are growing faster in those areas. We can do that too. By 2008, they're in trouble. Subprime meltdown, banking crisis. They had to be bailed out, along with many other banks, by the U.S. government. This was not unique, but they had gone from their pioneering, innovative start to saying, we want to be like the other dinosaurs. We want to be like every other bank and not stick to what it is they did that was unique, original, and powerful, that created the wealth. After some stumbling and some problems, they got back to their consumer roots. And Capital One has done well since then. And they are primarily still a credit card-based business. They've sold off their mortgage creation business and some of their other businesses, and they've come up with some other pioneering innovations, intriguing things. But they did stumble, as they said, we can be just like every other bank, and they were. They failed, just like every other bank. But they were an early pioneer in data analytics, AI, expert systems, big data, risk assessment, knowing your customer better than anyone else. They did a lot of things really, really well, and they were a FinTech pioneer. Why do I call them FinTech, even though they're the 10th largest bank in America today by assets? Because they started with almost nothing, and they grew to be huge, and they transformed the industry. They put other banks out of business in some cases, or other credit card businesses out of business. They forced other people to copy their pioneering innovations or go broke. You either had to develop capability like Capital One had and had pioneered and had an advantage in, or you had to get out of the credit card business, because the only customers that Capital One didn't want were the ones you also didn't want, or were the less profitable customers, and that was difficult. Now today, the industry is much more efficient, much better at assessing risk, and Capital One is similar to many other very large and successful banks. They're not alone. Most FinTech firms will not be alone forever. They will be copied or bought out. The other banks will adapt or die. And so this is an example of a FinTech pioneer who transformed an industry, changed the nature of consumer lending via credit card business, and succeeded marvelously in the process, but then stumbled as they became a giant and didn't transition well to a different managerial challenge and market market environment. Um, so that's maybe an analogy that we can draw and say what might happen to other fintech firms. How might they succeed, and how might success even sow seeds for its own problems as you try to move from success to greatness. That's it for that case. Hope you enjoy that. And by the way, if you don't have a Capital One credit card, maybe you should think about it. They offer some great rates, some great products, and some nice features. Uh, Innovative, pioneering, and interesting company. Thank you very much.